Monday morning, folks, and welcome to a brand new episode of FinMet Mondays. Sunil, great to have you back after a 3 week hiatus. Thank you so much for tuning in. A lot has happened last week. Gold has risen from the ashes, so to speak, with inflation declining. But there are still concerns in the market, and I think we should address them today. One of them being, um, how do you think the Fed is now going to position themselves based on all this enormous amount of data that has come, which is definitely in favor of the bulls? But how do you think the Fed is going to plan the interest rate hikes going forward?
Well, firstly, it's nice to be back. Shawn, I must say that in our last call, you got it absolutely right. You talked about gold being going down to 1900, being supported, and then going back up again. So, congratulations to you. I think, as far as the Fed is concerned, the data that's been coming out has been mixed. I think we're seeing that the signs of inflation coming down are there now. And so the Fed should be happy that their interest rates hikes are working well. But I think going forward, they will still stick with a 0.25% increase this month on 26th of July.
Interesting. So definitely there's a wait and watch approach that the Fed is going to adopt. But Sunil, you have been around to witness many economic cycles, right? Right from, I'm guessing, the 90s. Um, in the past, has there ever been lagging effects of interest rate hikes, elevated interest rates on an economy? Have you seen that really unfold, and have you seen that really affect gold price action if you look at it historically?
Yeah, the famous time is 1980s, where the Fed could not control inflation, and then gold went all the way to $800. So I think that's what the market is concerned about right now. Um, but this time around, the Fed was quite aggressive, much more aggressive than the market expected, and I think that's why you're seeing um, gold remaining within a range bound situation. Um, I think there is a concern if they go beyond one hike in July, they do another hike in September without waiting for the data, then you could have a problem. But I suspect the Fed is going to be more cautious going forward.
Definitely. One of the things that's also been happening is a lot of investors called, a lot of our clients called and asked, "Hey, do we go long now in gold? Do you see the pathway for gold just clearing up now that we've seen inflation decline and hitting its 2% target?" And I said, "No, no, wait a minute. There are a few more things that we need to be sure of. One of them, like you mentioned, is the Fed rate, and they were also interested to know the levels, the technical levels that they should really be concerned about. So let me just quickly, for our viewers and for you as well, Sunil, show you how it looks on the daily charts and comics as well. Are we expecting a correction in the gold markets? And the short answer is possibly yes, because the pathway for gold ahead is still not very clear. This this red line that we see here, which is the 1976 level, this can pose to be a major resistance level for gold, despite its uptick last week that we saw. I think what's going to happen is we are going to try and test this level this week. And if not the 1976, then definitely the 2000 level. And we are going to see a bounce back towards the 1950 level. Yes, there is a 50-50% of markets moving back to 1930, 1920 as well. But again, we need to adopt a wait and watch strategy. We need to have more data come in. Definitely the 26-27 FOMC meet where Powell is going to announce his 25% rate hike. That's going to be another key event for us to monitor and follow to really understand how the markets are going to move. Right. So we're really talking about the 1900 level acting as a strong support for the markets on the downside, and that support is definitely going to hold at least in the short term, at least for the next couple of weeks. Yeah. All right. So that's the levels. That's a roundup of the levels, and that's a roundup of the Fed policy as well. Sunil, thank you so much for giving me your valuable time and insights as well as we head into another exciting week where we are trying to predict what's going to happen. And as usual, it's going to be a bumpy ride. But nevertheless, we're going to catch up next Monday as well. But till then, take care and thank you.
Thank you, Sean. Thank you. Take care.